Welcome to the nuts and bolts of real estate. My name is Joe Bauer, and I'm here with my co-host Julie Clark. Julie, how you doing today?
I am doing good, Joe. We've all got our winter little snuggies on here. I appreciate these guys just waited for me because we had our city slicker snowstorm out here in Seattle. And I live at the bottom of a couple hills here. Actually, it's starting to dump again right now. And I had to make a break for it to go get some prescription stuff for my mom and get a little grocery in case we get stuck down here, which sounds stupid. Absolutely. But there you go. Thanks for waiting on me, guys. We're all in our gear. So thanks. This will be a casual one today, everybody. But I'm excited because today we are going to talk about commercial real estate. We are, what is it, December of 2022. And we are in a environment of inflation and instability with rates and when nobody has a crystal ball. So it's going to be an interesting conversation today to hear from our new friend, Michael Coffey from StackSource in regards to what's going on over there in the commercial real estate world. So just to kick us off, StackSource, you guys are going to want to know about this. You're going to like it if you're a multifamily and commercial investor. They are a prop tech company because my hobby is keeping track of all these prop tech companies and having them come talk to us purely based on my own interest. And I ran into StackSource and I thought, here we go. Let's get them on the podcast. So they're a commercial real estate prop tech company that helps you achieve an optimal combination of rate, leverage, and recourse on your commercial loans when you submit your deal to StackSource and work with one of their capital advisors. You can receive your best financing options. The idea is you're going to get those options in minutes and get multiple quotes. And today we've got our new friend, Michael Coffey, here joining us, who is the capital advisor for the Pacific Northwest for StackSource. So what's up, Michael?
Howdy. Thanks for having me.
Absolutely. Absolutely. So you're over in Central Oregon. So you guys, you and Joe lives in the mountains. So I'm sure you guys are laughing at me today, but thanks for making the time to reschedule a little bit. So I'm going to let Joe kick us off with our normal questions so we can get to know you better. And then we'll jump into it.
Yeah, Michael, our first question is always about your history. So we'd love to know, how you grew up, where you grew up, and how that led you into your crazy world of real estate now.
Oh, sure. Yeah, just to tie, so I do live in Central Oregon. I spent my very early years in Everett, Washington. Grew up there. Used to do a lot of roller skating and break dancing, if that helps pin down the era that I was up there. We moved down here. What's that?
I said 80s. Is that you?
Oh, yeah. Yep. There might have been some parachute pants involved. So I moved down to Oregon when my family did for job, and I've been down here ever since. Lived in the Portland area. Since COVID, we decided to move out to Central Oregon, get away from the city a little bit and the mayhem that brought. But I have been serving, Portland, Vancouver, and the Washington areas and Idaho as well for 23 years in commercial real estate. So I've been around a spell. And I started my career in the back room, actually helping some senior loan originators document their files, work with escrow, work with appraisers, work through all of the underwriting questions that come across during a normal transaction. Since I've been around a while, I've seen all of the different phases of and cycles of real estate. So I was around in '07 and '08 when the financial crisis hit, and we survived and thrived during that time period. So I have taken that kind of backroom underwriting analyst role, and I've applied it to originating loans. So the goal is that we get ahead of those issues so that those issues don't even come up, so we can tackle them up front, make sure we find the right capital for your deal that's going to fit with all of the uniqueness that each deal provides.
Absolutely. How'd you end up at StackSource?
It's interesting. So I was at a small boutique brokerage firm, and I started looking out. It was during COVID. People were kind of doing stuff on their own. They were finding resources online. And I just had this feeling that the market was shifting. And it was shifting away from picking up the phone and calling your guy or your bank, whoever that is, and saying, okay, here's this deal, let's do it, to where investors needed to see options. They want to see as many options as possible. Let's explore all of the things that are out there. And when I'm one guy with an old school Rolodex, there's only so many people I can know. And so when I went out and looked and said, hey, I want to start providing equity for my investors, not just debt. I want to start looking at some more complicated capital stacks. When I went out to the marketplace, it was difficult to find that. I kept running into StackSource. So I was just like, hey, you know what? Let's just make a move and I'll help them. Yeah. And so that's what we do is we provide debt and equity. We provide PACE financing. We have access to GPs. There's even some crowd funding sources available on our platform as well. So it's somewhat my prediction of where I think the market is headed. And these guys had all of the items that I thought was going to be needed as we march forward.
Yeah, everybody wants options. Residential side has also changed that way. That is definitely my specialty and mindset is, understanding the options, yet keeping it simple by asking the right questions, right? So yeah, let's jump into it here. So tell us what StackSource is basically. So people can go look up stacksource.com and you're going to easily see it. But I mean, you guys are mortgage brokers, right? Commercial mortgage brokers, but that's not what StackSource is. Exactly. What is, tell me the best description.
Correct. Yeah, we have capital advisors all over the country serving different markets. You could say we are the mortgage brokers. So we analyze the deals, we take the deals in, we source them, but where the platform kicks in, and this is the really amazing part. So when we go through, we analyze a deal, we do a write-up, we have all of our numbers put together, we understand what the client needs, what structure they're looking for. Then we upload that into our platform, and the platform matches it up based on all of that criteria. I think there's something like 20 to 30 data points that it looks at, and it goes out to the market and finds the lenders that fit that exact criteria. And then we can, with the hit of a button, send that package out to all of those capital providers. So the old way of doing it was we would put some semblance of a package together, call a few lenders, figure out which one is going to get us the best rate or the best terms, and then we present that to the client. In this scenario, we're presenting multiple offers to the client. They can log in, they can see those offers actually as they come in, and they can compare them side by side. So you can make that choice for yourself as to which option looks best. Maybe you prefer non-recourse financing, but there's a recourse lender out there that's going to give you much better terms in the other areas. And you're like, hey, you know what? I can deal with the recourse for this initial hold period because I'm getting all these other goodies that the non-recourse lender couldn't provide, as an example.
Right. So, I mean, let's go back to talking about relationships, right? Another broker on my team, we were just talking about this, even on the residential side, is that especially in today's environment where things are not stable, I don't think people maybe borrowers don't think about it, that lenders change their terms they offer based on not just what rates are at, but what's going on with, if they're able to sell their properties or their loans on the back end, or if what their production in-house, if they're too busy, or if they're, and so you will never know what stage or what's going on with a lender, right? Because it could change all the time, right? So sticking to the relationship thing, we always talk about the relationship thing in real estate. How do you guys get away from having people, like you said, just be, I don't know if it's just education on being loyal to the lender they've been using for the last X number of years, right? Because they figure, oh, well, they can get the deal closed and, they know me well, so it's less hassle. How do you convince somebody to then just go out to a mortgage brokerage situation and work it that way?
Yeah, that's a great point. I have good solid relationships with a lot of lenders as well. I brought them a lot of deals over the years. But they do change. Sometimes they change drastically, sometimes they change overnight, sometimes they change mid-deal. And it's important for an investor to keep their eyes and ears open and to see, because while there is some advantages of going to someone over and over again, they get to know you, they already have your tax returns, maybe they kind of know what structure you prefer. But ultimately, if they can't hit the leverage you need or the structure you need, which sometimes is more important than rate, it's important to know what else is out there. And especially, I think, in this environment where things are changing so rapidly, keeping your options open is going to be key. What you don't want to do is get locked into long-term financing or something with a prepay if, for example, in 3 years, you're like, hey, I really need to explore selling this asset on a shorter term, but the guy you always talk to has got a 5-year prepay, for example. So just having that flexibility and testing the market is a great asset.
So how do the lenders get notified of the deals, and or how do you guys keep up with somebody submits the property and then it just blasts out to all the lenders and they decide to pick it up and respond, or how does that work?
Yeah, so a couple of things there. So yeah, when a deal is uploaded, a capital advisor will take it and analyze it so that we're getting another pair of eyes on it. We'll underwrite it, we'll stress test it. I will even, and I know a lot of my fellow capital advisors will do this as well. They will go ahead and call a couple potential capital sources and just kind of test the market. Like, hey, I got a client looking for XYZ. Is this something you're still interested in? Or kind of what's my rate range, so that we can make sure we're analyzing it properly. What we don't want to do is build an expectation that can't be met. So when we go out to market, we're going out with something that's obtainable. It's not, 90% loan to value request or something like that just isn't out there.
How does it work? So if I had a deal, am I uploading it to StackSource, or what's the process?
Yeah, we can do it a couple different ways. We do have quite a few clients that enjoy the process of going through, and the platform will walk you through a series of questions and ask for certain data points. Some people really enjoy doing that part of it. Some of my older investors prefer picking up the telephone or even emailing me the deal. I can go submit it onto the platform as well. Either way, though, it's going to end up in the same spot where we're putting this nice looking package that's well thought out, reasonable. We've got, I do a detailed write-up on each deal to kind of give some background, so that when it does get pushed out to lenders, they're looking at think of it almost as an offering memorandum that you would see on the sales side, we put together for our financing side.
So, but I mean, isn't that what most mortgage brokers would do anyway? So what's the difference? Where does StackSource come in as the difference, assuming that any mortgage broker is going to put a package deal together like that? You know what I mean? I don't know that there's extra special sauce related to that part of the process. I don't know why I thought StackSource was one of these things and maybe it is, where I have enough information on the deal where I'm going to go in and I'm going to basically stick it in there as like all the data points that I know, my NOI, whatever I need. I don't know. What are some of the questions that get answered, right? What's your...
Yeah, so it looks at location, obviously, is a big one. Loan to value, looks at asset type, looks at development, stabilized. It looks at, it gets in the weeds when we start talking about different asset types, but it starts dissecting that. It gets as focused as if we have a foreign borrower, if they want recourse, what kind of fixed term they want, all of those sorts of aspects of it. But what makes us different because I did do some of that in my previous positions where I put a package together. It certainly didn't it didn't have the look and feel of this. We have pictures included and all sorts of other data that gets packed in, gives the lender a better view of the deal. But what makes us different is that it's going out to, we have over 1,200 different products in our database. So it's going out to a much wider audience than I would as a single broker. So we're looking at life companies, family offices, debt funds, obviously banks, credit unions, CMBS, agency, all of those, in addition to any potential equity sources. So it's going out instantly to all those.
And if I were to plug in all that information, how long does it take me to get back these, I don't know what you call them, not like I don't know if it would be, it's not a term sheet necessarily. Is it just like a quote or?
We do. I got a term sheet within 24 hours before of it being submitted. I put a deal out, was that last week? And I had 4 responses within an hour. I had 4 people ping me back on that deal, asking various questions. So it does happen. It can happen very quickly.
I mean, because a big part of getting deals is the timing, right? How quickly, because this, when it's competitive, the clock starts ticking right away, right?
If I have all the data, which that would be whatever you can get from the seller, if you're looking at a deal to acquire, and that obviously ranges depending on the sophistication of the seller. But if there's a deal room and they have a rent roll and a P&L, that generally is enough for us to, so you upload it, I can put my eyes on it, analyze it fairly quickly, and do a quick write-up and get it out within a few hours.
Let's talk about that for a second, because a lot of these times, these mom and pop type properties, either you're getting a pro forma from a broker, which is meant, the numbers are BS. What are like lender to let borrowers know here? I always, myself, it's reverse engineering the deal, right? You got to have the end in mind before you buy it. So, for example, what are some terms like that the lenders are going to have minimums on, meaning such as lenders are going to use 5% vacancy loss, or they're going to use a maximum of 3% another income, or they're not going to use less than, of course, the expenses. They're not going to use less than 35%, or maybe 45 or 50%, depending on the age of the property or whatever. Is there some underwriting guidelines that, if you don't have a lot of information, or you're just initially getting the info, like, are they all going to underwrite a property management fee? Are they all, are they going to use, depending on the age of the property, $300 as, a unit in capital expenditures? I always, as a broker, I feel like sometimes if I had a multifamily, like I just had one that I was brokering, and I was getting these offers with these loans they'd kind of give me like this LOI. And I said, well, you're not going to be able to get that loan, right? Because I know the underwriting kind of basics well enough to say that's not an achievable loan. And I had other brokers tell me, you're offensive. I've never had anybody, I don't think they knew what they were doing. What do you say about that? Isn't there some basic parameters that can be applied in underwriting if you know that somebody's got to get a loan, that you have this mom and pop that's, NOI's low and they're trying to get a 70% loan to value or something like that, and numbers aren't penciling? Can you help me understand that?
Yeah, no, that's great. I've actually written quite a few articles about this. I publish them every Thursday on my LinkedIn, kind of walking through the underwriting process and what we use. So for me, if I have a current rent roll, and so I know what my current rent is, the only number I really need help with is the utilities. If I have that, I can build a pretty robust P&L. I can look up taxes. We kind of know insurance is going to fall, depending on the age of the building, $350 per door per year. I keep in really good contact with appraisers, so I know generally what their R&M and turnover numbers are going to be. So regardless of what a seller is telling me, I'm going to use what is going to show up on the appraisal. Figuring anything over that is probably CapEx. We have a chance later to pull it out. We're going to use on a smaller complex, probably 7%, 6.5% to 7% for management. If it's a bigger complex, we'll use a lower, and then we'll kind of look. I'll talk to the sponsor, the new sponsor, and say, how are you planning on managing? Are you going to use an on-site? Are you going to use an area manager? And we can kind of build around that. Everything else, we can look at landscaping and kind of guesstimate, what that contract would look like. A lot of times sponsors have those numbers in their heads already. I have long maintained every party that's involved in a commercial real estate transaction has their own NOI, because they're all coming at it from a different perspective.
Right. But isn't the only one that matters to make your deal work the lender's perspective in some senses? Because that's how you're going to, to calculate your returns later is based on the stabilized loan you can get, right? So it's sort of, you might have your reality of what your budget looks like, but in order to get that stabilized loan, you're going to have to play ball with whatever the lender's perspective is on all that, right? So
yeah, and that's part of the presentation that we talked about earlier. If I have a P&L that maybe the income is off, the expenses are, maybe it's self-managed, right? So they've got no management fee, but then they're writing off meals and travel and all this weird stuff that you wouldn't typically see on a P&L. If I just hand that to a lender and say, what will you give us for this? I'm not going to get the answer I want. So what we do is we go through it, we build our own pro forma, and then I justify that pro forma with the lender. I'll walk through, I'll line item and detail some of those items that show up on the P&L, like, hey, this won't be going forward, this won't be going forward. Here's the numbers we expect to see on an appraisal. We really tie all of it together so that when they do issue a term sheet, they're issuing it based on numbers that we know we can hit.
I mean, do you really have borrowers just like not go through that process themselves? Like they just get a P&L from a seller and say, hey, Michael, tell me if I have a deal here or not? Because that's kind of, you would think that the borrowers would at least try and do it. I'm trying to teach people, like, you guys, you can use some basic underwriting terms here, and then also check with Michael or whoever your lenders are, right? But I mean, if you have like a 6 unit or an 8 unit and the expenses are coming in low based on somebody's P&L, right? Mm-hmm. Because it's mom and pop, they're just, the numbers aren't there, right? There isn't there we can, like you said, we can plug in the taxes and an insurance number, and it's the utilities that we need to get, and the understanding maybe what a standardized turnover is. But are there lenders that won't go below, or do they not go below, let's say, like 35%? If you don't have all the numbers, like factual numbers, and they have to draw the line somewhere, is there such a thing? Do you get what I mean?
Yeah, I mean, they have some metrics they look at that they hold to. The expense ratio, that one is pretty squishy in my opinion, because I was looking at a deal, I think it was last week or the week before, where the units were individually metered for water and sewer. So the expense ratio, even I was like, that can't be right. Right. It was in the low 20s. I'm just like, that can't be real. And so I kind of went through it again and again, trying to figure out, what am I missing? And it was just, they had rents peaked and it ran skinny, and it that's what it was. So it garnered obviously a more attractive, or a tighter cap rate.
So then your job there would be to go to bat to say that, no, these really are the expenses. And the lender is going to say, okay, Michael, you've convinced us that we don't have to worry about that. Is that what the point is here? Is that as long as you can build a story behind why you're going to go fight for it? Yeah,
I want to shore up my belief in the deal before I present it. I need to believe in it. And if I can get in there and really analyze and understand the numbers, believe what this sponsor, how they're going to approach the building, it gives me the ammo I need to go fight. And look, there's going to be lenders you won't win those battles with, right? They're just going to hold hard and fast to certain standards. You're not going to change their minds, which is the argument to go as broad as you can. And with this platform being able to go broad with that full package, we're going to capture those lenders that are like, hey, yeah, we'll look at that. We'll consider that. We'll give you a break here.
Hey guys, it's Julie here with a quick break from the show to discuss an opportunity some of you may have interest in, which is to work more closely with me. On almost a daily basis, I get calls from investors and brokers, both new and experienced, asking me for guidance or advice. I love helping you guys out, and it keeps me on my toes too. So with that said, I wanted to let you know that I have a private broker coaching community called the VIP Education Community. And the best part is that it's 100% free. That's right, it's free to join. So whether you're a traditional broker or a broker investor, my VIP education community offers personalized one-on-one coaching from not just me, but also from my experienced broker friends with expertise in all disciplines of real estate and real estate investing. We'll teach and share our modern marketing strategies, our tech and lead generation resources, plus teach you how to identify or offer up opportunities for yourself or for your clients using techniques such as seller financing, lease options, land entitlement deals, BRRRR investing, flipping, multifamily or commercial coaching, whatever you like. We've got it all covered for you. The future of real estate is changing fast, and to stay in the game, it's time to learn about all the options you can offer your buyer and seller clients, as well as, if you want, learn how to use those skills to grow your own real estate portfolio. If you'd like more details about joining my VIP education community, reach out to me at julie@seattleinvestorsclub.com or text me at 206-910-2985 or just send me a Facebook message. My new favorite phrase is community equals confidence. So let's navigate the future of real estate together. Now, back to the show. Is there like a team at StackSource that is full-time reaching out to lenders across the country and vetting them and getting them onto, there's like somebody that just brings lenders onto the platform full-time, I guess?
Yeah, so we attack that twofold. We do have an analyst team. It's a 3-member team. Their job is to vet lenders, keep updated with lenders. As we get quotes in and we're told, hey, we're only doing 65% now, we can go into the back end of our database and change that. Where the real power, though, is that...
Wait, let me back you up, though. What does that mean? So you guys are keeping track of that stuff on the back end.
Yeah.
But how does that play into the entire process? So I've uploaded a deal or sent you a deal, or you're ready for the lenders package ready, you're ready to blast it out, right? Is it blasted out to only the lenders that, you've asked your handful of questions to this borrower? The borrower says, I need a minimum term of this. I want to, be able to refinance here. So I don't want a prepayment penalty or, whatever. I need a certain loan to value, or I need interest only for a period of time in order for this to work. And then you guys upload it to your platform and you put in like, I need lenders that do this, or do you just, what's the matchup between who receives it as those lenders? Is it like you're clicking some boxes on your end about looking for a lender that that fits these parameters, and then it just matches? So somebody's got to keep up to date constantly with what these lenders are offering?
Yes. Yeah. So the matching happens automatically. So let's say you require interest only on a deal. Let's just use that as an example. We have a data point in the backend database that has that selection of whether they offer interest only. So if you require that, then it's only going to match up to lenders that have raised their hand and said, yes, we will offer or look at interest only deals. So where that benefits everybody is that the lenders are only seeing deals that they have said, this is what our criteria is. So we get good, solid looks at our deals, as opposed to some of the other folks out there that are doing the same thing, they're sending it to lenders who have said, we do not do this kind of a deal. And so as capital advisors, as I'm out there and I'm talking to lenders on a daily basis, I'm interviewing lenders, couple a week and getting them onto our platform. We're finding out those data points. So as things do change, which they have and will forever, we'll go in and massage the database to fit that criteria so that they're only getting matched up.
Cool. Yeah. I mean, it's kind of like speed to lead, I guess, a little bit on that. So what are the questions when you get a new file that you ask of a borrower? Do you have like top 5 questions that you're going to ask them?
Yeah. When I do my initial sponsor interview, I want to know how they're getting into the deal, right? Where's the money coming from? How are you capitalizing this project? How long they expect to hold that particular property, what their plan is. Is it a value add? Is it like a quick value add, or is this a slow burn value add? And then what their long-term plans are as in that investment. Is this a 10-year hold? Is this, more realistically a 5-year hold? Because that helps us build that structure that we need on the loan to best serve that sponsor and what they're looking for.
So you're going to reverse engineer into it, basically.
Yeah, because I don't want to put someone in a 10-year with the yield maintenance prepay if their plans all along were to sell in year 5. That doesn't serve anybody at all. So we want to make sure that and I do talk to investors like, I haven't really thought about it. I'm just trying to get into my, just trying to place this 1031 money, and they haven't really thought about it. So it does force that conversation and force that thought process to go, what is the plan? What should I be doing with
this?
There's
a little side question for you on somebody that has 1031 money. I have myself, it would be mortifying if I had to deal with, I have a, property I've owned for 20 years that I have in partnership with, some others. And if we were ever to sell that, I'd have a terrible 1031 or need, right? Are you guys, so I'm always in the back of my mind thinking, who's going to be able to help me place if it, for some reason came up, how am I going to get this money placed or be able to do a 1031? Are you guys able to help? Because it sounds like you're matching equity too, right? Are you able to help people, people who are in need, that accept 1031 money?
Yeah, most of our purchase transactions have 1031 funds involved at some level. So going back to your earlier question of what questions I would ask, if there was a 1031, that would be one of the first questions. Okay, well, what structure did you sell that property in? What structure do we have to go into on this new one to make sure?
Are you able to place the 1031 money into somebody else's deal that needs equity, the equity matching?
If it's structured properly, yes. Some of it will depend on who the exchange accommodator is and what they'll allow their sponsor to do. Some of them are much more strict than others.
Is it more important on the structure of the 1031 on the one for who's receiving it or who went into the facilitator? Is the going in there is kind of the same. It's the structure on receiving the 1031 money. Is that right?
Yeah. And, I don't want to overstep any attorney's toes. Yeah. I don't want to advise there, but basically, yes, the structure needs to be the same. Now it gets a little bit different when we're talking about tenants in common structures where, then parties are free to go wherever they want with their portion. If you're in an LLC and you close and you've got partners, that group is going to have to go into the new property together as a group.
Okay, we won't deep dive on that. Not our wheelhouse today. Well, good. So what do you find that you enjoy about StackSource compared to your history of working? Where do you feel like this has improved your business for your, for yourself on your side? Because you've been around the block, what's made a difference for the borrowers by using StackSource?
Sure. Yeah. And I'll explain that through a story. So I just closed a transaction down here in Portland. It was a food pod court. So a bunch of food trucks, and those traditionally don't trade Those don't sell. Developers develop it, get the concept, and then they hold them long term. So this was kind of a unique situation. The sponsor came in, he was in a 1031, so he had certain loan requirements he needed. And I had never done one before, so I didn't really know where to go myself. So I called a few kind of mobile home park retail lenders that I knew of to say, hey, I've got this hybrid. Would you be interested? And I got a lot of no's. I even called the lender. We looked up the lender that had the loan on it for the seller, and they even said no, that they weren't interested in re-leveraging that property. So this is one where I truly blindly put it out on the platform, having no idea where it was going to end up. And it ended up getting, I mean, there wasn't a ton of matches given the uniqueness of the property, but it did match up to a new lender I'd never heard of, new to the area. And then it also matched up to a lender that I never would have thought to call. They've traditionally been very, very conservative whenever I've run into them. So I just wouldn't have known to call them. They ended up closing on just such amazing terms. They held the rate all through this recent run up in rates we've had. They were just a joy to work with. So when we closed that, I just had to smile. It's like, this is amazing. Like, I don't know for sure if I would have been able to find somebody on my own if I was just dialing for dollars.
But I mean, every property you put out, right? I mean, let's say, like, oh, I just closed a loan last week with whatever lender for this borrower, whatever that deal was, and that they've been the winner for the last 2 deals or whatever that you've done. When you get a package, are you going to just call them up, or do you always put it out on the platform?
We always put it out because we want full transparency with our sponsors. They need to be able to see that I'm not behind the scenes dictating, hey, this is where I want this to go for whatever reason. I will definitely give my recommendations, but it's important that they see all of the various quotes, because there may be something in there that they see within that quote, within those terms. It's like, oh, I didn't even know that was available. That's more important to me than what I thought was important to me, that short term, or maybe there's no prepay. And they were like, hey, I really don't want to prepay. I didn't realize that was even possible. And I'm willing to give up my rate a little bit to get no prepay, or whatever the case is. So it's important that they see that.
Are the lenders giving options within, like, is one lender saying we can do it this way or this way when they're communicating back, or are they just giving one sort of term sheet?
Some do for sure. I put a deal out recently. The lender had a buy down option. So they gave us 2, like, here's par, and here's, if you pay a small fee, we can get the rate down. It actually netted us more proceeds. So I discussed that with the borrower, and I will always put notes at the bottom of the quote that, hey, there's some other, maybe they have a 10-year option available, or they have, an interest only option available, just so they can see that there are some options out there.
And how do you guys know, one of the big questions, I was talking to my own team this week. I was challenging somebody saying, hey, I think you better start shopping around lenders. I know you love so-and-so, but with things changing and things bouncing around, all the lenders are doing different things at different times, and it's hard to know. And I know we have our favorites or our relationships and so forth, but, to do the best service of our borrowers or our buyers, I mean, right, you want to get out there and shop them the best, right? They're going to be able to afford more if they get the better terms. And one of the responses, well, yeah, but I also want them to be able to close. Right. Sounds great to get great terms, but what really makes the difference if somebody can actually close or not retrade on you? What's the situation with that, with all these different lenders out there on the StackSource platform, and how do you track that?
You mean keep them held accountable?
Yeah. I mean, not every lender, like I said, just because they have, doesn't mean that they'll close on those terms, or doesn't mean that they'll,
sure,
maybe they've retrade you at the end, or, do you guys keep track of who's got good closing ratios on, what they put out there initially?
We do actually. Every deal we close or that falls off the platform, we fill out a survey internally and we rate the lender in various places. Some of it's speed, how thorough were they in their underwriting, and then the big one is the retrading. That is a big concern, especially right now with the way things are changing. So we keep a rating system internally, and so I can go in and see, hey, is this, so and so is quoted on this deal? I'm going to go look, and I will go see, okay, how many times have we closed with them? I'll go talk to the capital advisor. How was that experience? And that is a big issue that we see is the retrading. And so that's one of the first things I look at is, did they close on the terms they promised? And, loan amounts will fluctuate because an appraisal comes in with a higher expense or, something happens along the way. But by and large, did they hold to what they promised? We also have a banned lender list, and those folks do not and will not show up in our matching. So they're in our database, so to speak. We can go look and see. I have the list that I can see who's been banned. So if I run into a lender out in the marketplace, I can look and say, oh, they're notoriously retraders, or they get high fees up front and then disappear, that sort of thing. We can see those, so then we know not to even bother sending it out.
And do you feel like the speed is a big difference here, right? So once you get your basic information gathered in a quick underwriting, how long does that normally take you?
I can get it done within a few hours. Again, if I have the core items, I can have it up on the platform within an hour or two.
And then how long typically does it take to get back your quotes from whoever's responding on the lending side?
If it's we've kind of been talking multifamily here today. So if it's a basic multifamily deal, like I said, it could be within hours. I could have responses. If I don't get responses for whatever reason, it's the holidays, people are gone, I will start calling and emailing the next day saying, hey, I sent you this deal. Did you look at it? Did it go to your junk folder, maybe, whatever? What are your thoughts on it? And then we start engaging with them through the phone or through email just to make sure that they saw it, make sure they, see if they have any questions. Or sometimes they'll say, hey, I can't quite get to 75. I'm sitting at like 73. Do you still want me to quote it? Absolutely. Let's get it up there. Let's let the borrower see what the quotes are.
That's awesome. Okay, well, good stuff. Well, how about what's going on? What are you seeing right now? Do you have deals that get submitted to you and you have to give that borrower the feedback, or you do like, hey, man, that doesn't look like a deal? Do you feel that you have borrowers that are sort of relying on you as their second set of eyes, or?
Yeah. I've got some long-term clients that, they will come to me with, hey, what do you think of this property? And I'll take a quick, look at it, run it through my underwriting and give them some feedback. And I'm definitely from the school that you under promise and over deliver. So I really try and be as realistic as I can with clients or sales brokers that bring, I have a lot of sales brokers that bring me deals pre-listing to run through it and get an idea of, hey, what would financing really look like on this from a buyer? What can we expect? I want to make sure I'm positioning this properly, or, selling to the right group of folks. I'll look at it and I will give very honest feedback. And sometimes it's not great. If somebody's got to refinance, it's some property that they have emotional attachment to, and they call me and then they find out, oh, I can't get what I need. But the alternative is, me leading them along and getting them trapped, making them feel trapped. I never want anyone to feel trapped. It's like, let's be very honest and clear about what we're looking at. I love teaching, so I'll dive into the numbers. Hey, here's why we can't get the leverage you're expecting.
What is going on right now? What are you seeing in the market right now on, like as a value add loan? First of all, we have a couple things going on. We have the fact that a lot of cities now, like the city of Seattle, for example, I don't know what's going down in Portland and so forth. Let's say you bought a value add deal, right? You can't even give out a rent increase for 6 months. So how does that match up these days with the terms, like bridge loan terms and stuff? Like it seems like it's getting a little tight on that sort of thing. Or do you think lenders are building products around that?
Yeah, I think they're starting to. I think it changed so quickly and so drastically that there were a lot of deals that got caught, a lot of sponsors that got caught unawares, and lenders that got caught unawares as well. And that's unfortunate. It does happen though, and that's part of the risk, right? We all take in this business. But I think now that we all understand, hey, we're in an environment that's very volatile, and we've got jurisdictional issues in certain locations. Oregon has rent control as well. We call it state rent stabilization. But the city of Portland has even more draconian rules around that as well. We also have part of our rules are that you can't give no cause evictions. So that has become way more restrictive than even the rent control
Right.
did.
So what do the borrowers do?
I will build, that's part of the interview process. So if a client comes to me and says, hey, I've got this 6 unit, I'm going to boot everyone out and then renovate the units. And so I'm like, great. How does your attorney feel about that? How does your property manager feel about that? Like, well, let's talk about that plan.
Realistic timing. Yeah.
Exactly. And then he's like, well, actually, what I'm going to do is I'm going to pay them to leave. Oh, great. Let's build that into the budget then. Let's make that part of the strategic plan. Because when I go to a lender, whether it be, bank construction lender or a traditional bridge lender, or maybe bridge to agency, that exit plan is the key to the whole deal. How are we getting out of this thing? How are we going to turn this property around? What does that realistically look like? And if I can make it work on more conservative principles, then it makes it much easier to underwrite.
Oh, how are you? Are you seeing like bridge loans? I mean, how do we know how do we do deals today with, we don't know where the refinance rate is going to be? Or are people doing loans that have a built-in like earnout or something like that, where you take it as far as you can during the term, and if it's not the right strike time by the end of that term, what happens? You're just like, how does a value add deal work for you today in today's environment?
Yeah, so we're underwriting the exit much more strict than we used to. So we're using pretty inflated rates for that. I talked to a lender. It's a lender that's been around for a long time doing construction loans. They're underwriting even multifamily projects on a 25-year AM using a rate, I think it was 7.5. So even though that deal would clearly qualify for agency lending, which would be a 30-year AM, who knows where the rate would be. But my plan on that property was agency was my exit. They were underwriting pretty strictly, even more conservatively than the agency would. So we're seeing a lot of that. We have, quite frankly, seen a lot of those kind of lenders just put their pencils down and say, hey, we'll come back later when the market settles, when we can see that light at the end of the tunnel.
Well, I mean, it's all coming down to the purchase price, your buy, where you're making your money on your buy, right?
Yeah. And I don't think purchase prices have come down enough to compensate for that volatility. So it does make those
a lot of pencils
difficult.
Down right now. Then
yeah,
we are. But
guys,
and all our listeners, I think the buzzword is pencils down right now.
Yeah, I know, it's so funny. But what we have seen is a lot of the equity sources have also dried up. They're more scared of the volatility than the debt providers, because debt providers, hey, we could charge a rate cap, right? We can convert our program to a fixed rate to take some of that volatility out. You still have to underwrite the exit, but at least you don't have volatility during the term of the loan. But the equity guys, because if a deal fails, they're the ones, they're out. They have no recourse, with the property and to get paid back. So they are the ones that have stepped out. So they want something that is a bit more bulletproof.
Are you seeing the like the value add, where you need to refinance in 24 months or something like that, is a bit pencils down unless somebody's just getting a stellar deal or something like that? But I mean, if you're buying a stabilized property, you're going to hold it long term, right? You could always refinance down the road. I mean, these loans are only what, 10 years, 7 years, something like that, or
Yeah, we're seeing a lot of people look at, do I do a short-term bridge loan, or do I get a 3-year fixed at a traditional lender and just fund those repairs out of
okay.
pocket, or do more of a slow burn turn instead of try and jump in there and clear the property out and turn all those units within 12 months. So you're starting to see that analysis come out a little bit more in kind of weighing what's most reasonable. But lower leverage is where most deals are ending up anyway. So just, if you can go out and raise capital, raise some equity yourself, that's where we're seeing a lot of those deals get done.
You're seeing a lot
So
of
friends and family.
right now. Those are the deals that you're seeing get done.
Yeah. Or the small deals. Like if you're under 10 units, it's a much easier deal to execute, right? Yeah. You might have, I was looking at one the other day that had one unit that had been completely renovated and re-rented at extremely high rents. And even if we back those rents off and assume, okay, within 12 months, we can get all the other units turned and to market, the deal underwrote very strongly, regardless of what metrics we used. So those smaller deals, I think, are easier to wrap arms around and kind of understand the metrics of the deal and how to underwrite it. So when you get into the bigger properties, it's a bit more complicated.
So who's in trouble right now? Are people who's going to be forced to sell? Is it people that did a value add and can't refinance for their exit rate? So yeah, they've made their gains. They've made their spread on the deal, but they can't make their cash flow going forward, right? Those people are going to sell, or you think?
Yeah, I think so. I mean, if you had short-term debt in the threes and you went high leverage, it's hard to contemplate how you would refinance out of that. Luckily, a lot of those did have a longer term. So maybe, the fixed period's over and it's going adjustable, that's going to get pretty tight. So, but if you can't handle that, I don't see any other choice but to sell, because refinancing now in today's market, it's going to be tough to do.
Right. Just redeploy your capital and get a better deal today, maybe, or something like that. Right.
Yeah. Because there's buyers out there.
Yeah.
There's people with big 1031s that aren't afraid to jump in. You just have to recalibrate what you thought you could get for it. What you thought your exit cap rate would be, or maybe your timeline. Everyone's got to be nimble.
Well, good stuff, Michael. We'll wrap it up here. How can everybody get those articles that you're writing? How do they see those articles? That sounds good. Something to grab onto.
Yeah. So I'm on LinkedIn. You can search by my first name or by my full name, Michael Coffey. You'll find me there. You can also call me 503-866-8817, or email works just as fantastically.
So if somebody had a deal, they could either send it to you here in the Pacific Northwest or wherever you are. Let's say they don't know, it kind of makes it seem like you want to submit your own deal, or try it at least. Be kind of fun to submit a deal through there. So if I'm a broker, can I submit a deal through there if I wanted to? And you're ending up calling me. I mean, I could call you directly, but I feel like I want to go through your platform.
Yeah, if you want to submit it, absolutely. And then maybe give me a ring or an email, let me know that you submitted it. I can actually go find it and pull it down and start looking at it quicker. That definitely works. We've introduced a tool on there where you can get a quick indication of where rates are. So, especially in this market where things are changing so rapidly, you can go give some very basic details just to get an idea of who may be interested in that deal and what their rate ranges might be. That's a great tool. So it's kind of
StackSource.com and find that tool.
Yep.
Do we get your full LinkedIn? Keep on the LinkedIn thing. Let's cover that again, or unless we have it there, Joe. Do we get your full? You just look up your name on LinkedIn, I guess, and connect with you there to get those articles that are posted on LinkedIn.
It comes up, and I'm put it in the show notes. So in the description Perfect. Or show notes, we'll have Michael's link. So. But I did a search for it as we were just talking, and it popped right up. Just look for Michael Coffey and StackSource. There you go.
Nice. Well, good. I think this is awesome. Far as I like the speed about it and the fact that you're going to get multiple. It's a great addition. Are you guys getting a lot of traction off this, Michael, or is it more like getting the word out? Are you guys still in the word process of getting the word out about?
No, we a couple months ago we crossed over the $1 billion mark of funded capital. So
Okay.
we just closed one of our other capital advisor teams back east closed $141 million capital stack.
Wow.
So yeah, it got quite a bit of press. So yeah, it is definitely gaining traction. The ability to see lenders that you didn't even know existed is, to me, just an amazing aspect of it.
Well, and I just think that since they're all changing their terms, you don't know which ones, are keeping things in house a little bit more versus, what's going on in those companies, that it's just too much work for somebody to try and one individual to have is limited, like you said, and how many people they can know or what resources they might have, and especially in a volatile market, right? So makes perfect sense to me why you'd want to throw your deal into StackSource and see what you get. And obviously, you're going to end up talking to Michael here, who's been around the block. So can't do better than that. Well, good stuff,
Absolutely.
guys. All right. I'm going to, looks like it stopped snowing out here. Now we'll see what happens. I'm going to go, now I feel, I'm going to go try and drive out of my driveway just for the heck of it, see if I can make it up that hill. So I appreciate you guys again, accommodating me today. Joe, where can everybody find the details of today's podcast?
Yeah, we'll have everything down for you in the description below if you're on YouTube. And if you want to check it out on the website, you can go to seattleinvestorsclub.com/174 and we will have everything for you there.
Good stuff. All right. See you guys on the next one.
All right. Thank you so much. Bye.
Bye.
Thanks for listening to the Seattle Investors Club podcast. If you have questions that you'd like to have answered on the show, shoot us an email at info@seattleinvestorsclub.com. Now go out, take that action, and build that real estate business. Thanks for listening.